Welcome back to Trading 360. I'm Nicole Pedalides, live at the New York Stock Exchange. It is time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts right here at the New York Stock Exchange. We got a special guest, Scott Bauer, CEO of Prosper Trading Academy, gets to join us live on the set today. So glad that you're here with us. You haven't been in New York in a long time. We were last together at the NASDAQ. So I'm so glad that you were able to join us here at the New York Stock Exchange. Ben, you're going to have to take on Scott. He's going to start here with looking at Devon, 58.58 today. But after a recent high, it really tanked. It's down about 16% in 1 month. What are your thoughts on this one?
Absolutely. And, look at this whole sector today, this week. There was probably a lot of overbuying into this sector recently. However, Devon stands out to me for a couple reasons. Number one, it's the cash flow. First quarter, they generated $1.8 billion of cash, $1.3 billion in free cash flow. Secondly, they pay a massive dividend. They pay about a 7% dividend, although on this drawdown in the stock, that's actually a little bit higher right now. And then thirdly, from a technical perspective, Nicole, the stock did just break through the 50-day moving average. But if you look technically over the last year, that 50-day moving average has been massive support. I think this is a stock for a multitude of reasons. This is one you want to get into, especially on this big pullback right now.
So it's not just an energy play or a dividend play, but you're really looking at the fundamentals such as cash flow and such. Ben, your thoughts on this chart here?
Well, I understand what Scott's talking about in terms of the fundamentals. From a technical perspective, I think that you have to be a little bit patient and wait for some sort of recovery. Scott mentioned taking a look at Devon this week. Don't if you're bullish or if you own this one, because it has been coming off significantly, and we're really extending that move to the downside here this morning. We got all the way down to 57.37. Let's begin with the 1-minute time frame. Some of the weakness of selling we've seen just since this morning. We're talking around that 64.50 overnight level, $64 here on the open, again down to 57. Now let's move away from the more granular. I don't want to get too stuck on this 1-minute time frame. Just wanted to identify the selling we're seeing today as crude oil comes off here. The futures as we speak are down almost 6%, guys. Devon, though, you can see that selling here today, part of the bigger trend that we've seen to the downside. So again, I like to establish these areas of consolidation, horizontal development. They get separated by that vertical phase. And look, we are in a sharp vertical phase to the downside here. So seeking value lower at some point will establish, potentially will establish a new area of consolidation at a lower level. We could reject this lower level and V-bottom and get right back into the most recent area that we just broke out of, number 4. But what I'm looking for, again, with the trend type pattern of the downside is a new area of value to form at a lower level. Until we take out something significant that was established on the way down, I'm still kind of at the very least sitting on my hands in terms of Devon, DVN. I do want to point out here, this move lower, I did notice. I was actually going to talk about the stock, how it could be a bit of a buying opportunity right on the open this morning if we could hold this kind of lower extreme of this channel. But you can see this is an initiative, high conviction move below a channel to the upside, a trend that's been playing out on the bigger picture. Yeah, it's counter trend, but it still hasn't really necessarily given any indication that it's ended at this point. So for me, it's tough to go out on a limb and start to buy into this kind of momentum to the downside on a daily basis here if we close lower today. And it looks like we're talking about 8 days in a row to the downside after coming off that high from 79.
So you went from thinking this could be the buying opportunity to now this wait and see mode. So at this point now, I said it was at 58. It's already moved down to 57. Where do you see this going?
As Ben said, when it breaks down through a trend like that, maybe there's another 10%, 15%. I actually think in this marketplace, though, you're seeing these sharp moves based on perception, based on a little panic, and you're seeing that across the sector. As Ben mentioned, crude dropped 6% in a matter of minutes here.
Right.
I think this is a good area.
So 10 to 15% to the upside is what you're saying, right?
No, I was saying maybe this can go down another 10, 15%.
Oh, and then
I don't think so.
So you're betting this goes to the downside?
No, I'm betting to the upside here.
Okay.
I think this recovers. I think we just dipped below the 50-day moving average. I see $70 print probably in the next couple months.
Okay, but you're saying there could be more to the downside.
Yeah, during this period of a little panic here.
There's a lot of talk that the energy trade is very crowded at this point because a lot of people took money out of other funds that weren't doing as well, and they moved them right into energy because that seems to be working. Is that the first of the contrarian indicators when too many people crowd into one trade?
It is definitely a big contrarian indicator. There's no question about it. And we've seen that money roll into the energy sector over the last weeks or so. But again, Devin, to me, of everything in the energy space, because of the cash flow, because of the dividend, that's why I think it's one of the safest plays out there.
Right. So, Ben, final thoughts here on Devin. As Scott's saying, it has room to the downside. And you showed how it was horizontal and then did that big drop. But then maybe moving up to $70. Your thoughts?
Final thoughts are recent headwinds kind of weighing on crude, but I think the underlying, again, support that's been there in terms of the demand narrative, in terms of limited capacity to kind of resolve some of the supply constraints that we've seen should keep prices elevated. Again, just my point is when you see a stock, shares like this, or a futures product in a free fall, I have a real hard time kind of going out on a limb trying to pick a bottom. I'd rather have a bottom established and then find some buying opportunities on the way up as we work our way higher.
Yeah, understood. Okay, Ben, let's get to the next one, and we're going to take a look here at Walmart. So Walmart, after the quarterly report, basically, took this massive hit. It went from a 52-week high of 160 down to this 117, along with Target, right?
Yes.
Some of these retailers they got caught on the wrong side, too much inventory. It's just been a tough time for them. Tell me your thoughts at this point now, because 3 months it's down 18%.
Absolutely, Nicole, and there's a few things with Walmart. Number one, you look at where are people going to shop over the next 6 to 9 months, maybe the next year. People are just getting smacked over the head. They're hurting, right? They're looking for what they see as value. Okay, so number one, Walmart, many people think that there is value there. So to me, out of all the retail space, that's where people are going to head. Now, is that a reason why the stock is going to go higher? Not necessarily, but during an inflationary period, groceries are companies that typically do pretty well.
Yeah.
And people may not know this. Walmart, 60% of their revenue actually comes from the grocery side. So that could be another indication of foot traffic, of people coming back into the stock. Also, from a technical standpoint, you can say it's in no man's land right here, but if you go back almost 2 years to July of 2020, this is an area of a big area of support, a low that it put in right around 118.
Yeah.
So technically, fundamentally, and then quite frankly, overall, the environment that we're in, this recessionary, and I don't care if anybody says we're in a recession or not, I think we are. I think that's the place people go first for their shopping, whether it's groceries or other.
And you make such a great point, right, Ben? I mean, we watch consumer discretionary having a hard time this year in 2022, but consumer staples, you cannot deny the fact that your family needs some groceries or some of the very important basics to survive. So Walmart has a good mix on both of those, to Scott's point. Tell me, Ben, what do you look at when you look at this chart? He was looking all the way back to 2020 on this one.
Yeah, I think Scott's got his eye on a key level. I was watching the 118 area myself, and I'll show you why in a second. But first, I did want to take a look at some of the selling we've seen on the more granular again. Not necessarily dialing it down as specific as we did with the 1 minute time frame in terms of our look at most recently when we were talking Devon. But here you can see on the hourly time frame a similar pattern, though. That weakness, again, we're talking top left corner to bottom right corner, trend environment to the downside from 130 just a couple weeks ago down to, well, this week, 118, and this is a key area. Let's get into the daily time frame. Step back shows how Walmart has been trending higher. It's fared pretty well throughout this run up here. You can see the well-defined migration of value to the upside. You can see the recent attempt to break out up around 160. Now, relative to what we just looked at in terms of Devon and that breakout to the downside, you can see how it was somewhat limited in terms of follow through, limited in terms of ability to establish a new area of consolidation at a higher level, which we would have identified at number 5, upper, above 4 should that have happened. But again, rejection. Look what we always talk about. Weakness after a failed attempt at the upper extreme opens up a door through the middle for a retest of the lower extreme. We've seen that, but also look where we stopped. Again, right around 118. And one of the things we talk about, guys, is as we're forming areas of value to the upside, kind of referencing, or constantly, I should say, referencing the middle of the prior area of balance. So as long as we hold above this 113, 118 area, again, without anything sustained below, I think this is significant. Now, I also think what's important here is if we just quickly jump on over into the weekly time frame, you can see again the trajectory to the upside. You can see how Walmart at times is settled in these very prolonged, elongated kind of horizontal phases, this overlapping and rotational phase. Possibly we're about to settle into one here. I'd be watching, if so, the 140, 145 kind of middle of that range is potentially becoming, if this is now established a upper extreme, 160 lower extreme, kind of 118 area. But yeah, I'd be watching the 118 level. I think Scott's spot on with that level.
That's a brutal chart because, it looks like, it has this consolidation, it moves high, and then you just fall off a cliff. That punch in the eye just, recently, it's so tough to look at. I wish I could fast forward and see the rest of the year. Scott, your thoughts?
I agree with that. I mean, it's a tough chart to look at, but again, if you're in this for the longer term, and if you're both looking at the technicals and the fundamentals here, I think in the retail space, and I don't love retail overall. I think Walmart is as good as it gets right now.
Understood. So where do you see it heading? I mean, when the high was 160, it's at 117 rough.
Yeah, I have pretty much the same targets as Ben had. If we can clear through that 130-ish congestion that we had, I think we hit 140.
Okay, all right. Last but not least, looking at these Chinese stocks, that year-to-date Alibaba's up about 13.5%. It's been in somewhat of a narrow trading range, really, since December. I was looking. It's at 102.64. It hasn't done much one way or the other. Your thoughts on Alibaba at this point?
Well, I wish we could go back about an hour right now, because when I sent the notes about Alibaba, the stock was up over 10% this morning. It was trading 114, 115, and my notes were that this is one to short up at the 120-ish level. The reason for the pop this morning was because there was news coming out of the China Central Bank that they were going to accept the Ant Group proposal here, maybe thinking about some relaxing some of the regulatory rules here, and so Alibaba got a really nice pop. I don't believe that. And then on top of that, technically at the 120-ish area or so is the 200-day moving average. That was my target of where I wanted to short this thing.
So you have to wait for it to go back to 120 and short play?
The 102, 103 area right here, I'm not doing anything. If we get back up to where we were this morning, towards 115, I absolutely want to short it. Now, I do think there's more risk in this because the uncertainty coming out of China. So I absolutely would do this using options rather than just going in and shorting the stock. Right,
as Ant has been given this permission, to set up the bank holding company, and that's why it gets this pop.
Yep.
And now the drop. That exactly what Scott was anticipating. We should have done the show a few hours ago. But, that's the whole thing. Look at this chart. It does have dramatic moves. I don't, I agree with that. But when you look over a long period of time, it really hasn't done much.
Yeah, Nicole, when I look over a long period of time, I see a well-defined trend lower, and I'm a little bit concerned about the possibility that, we might not necessarily be out of the woods yet in terms of that. We're just kind of working our way towards the upper extreme of a range that we've been in over the last few days. And I just wanted to begin with the intraday time frame, the more intermediate hourly here. And you can see a range that's been established. We're talking going back since the middle of February. We were up around 129. We traded down to 72 in mid-March. And since then, there hasn't been a lot of directional conviction one way or the other, mostly a chop. And just, again, rotational type price activity, limited in terms of high conviction one way or the other. Now, taking a step back from the hourly time frame shows the daily, and we always say when in doubt, zoom out. Right here, there's not a lot of conviction one way or the other. This is the exact opposite. You can see, again, we're talking balance areas to the downside. I've got them numbered here all the way through number 7. Nicole, we had taken a look at Bob, I think it was back in end of April, and we talked about how were we starting to establish this area balance called number 7. At one point I had written a 7 here with a question mark. I took that question mark away here. I was actually going to put an exclamation mark there, but I think instead let's just sort of do what we did back when we were looking at potentially forming 7, and that was we establish the working assumption that if this market's trending lower, and again, it seems to be, there's no rejection of that mindset at this point, that, well, a new area balance will form at a lower level. And again, that's just the working assumption. When would that be kind of invalidated? Well, I think price activity above this range that we're at here, 123, 124, 125, because that coincides with the middle of the balance area number 6. So while forming the current area, we're always referencing the middle of the prior area. And in this instance, though, again, if you're kind of in that mindset that the trend's your friend, continuation more likely than change, well, you're favoring short-sided opportunities, tests of that 123 level that fail, breakouts below this $80 level or recent lows around this lower extreme around 75-ish. But yeah, I don't see any indication that this trend lower here has been invalidated at this point. While we have been a little bit of a chop since mid-Feb, in many ways that's just kind of conducive of and characteristic of this move lower here. And in many ways, if I was short this one or looking for a buy opportunity, I would think that there could be some more downside momentum with the type of price activity we've seen as of recent. Simply put, acceptance of these newer lower levels, zero rejection.
Right, understood. Okay, and Scott's nodding his head. So final thoughts, Scott Bauer.
Well, it seems like Ben and I were on the same page on 2 of 3 of these, but that's what makes a market, right? That's and people can look at things differently, but in specific reference to BABA, you know, that is just as bearish of a chart as you can get.
Yeah.
And anytime you have on a rally,
Tough.
I think you have to jump on this one right now.
Yeah, just what's your big picture thought? We're going to get going, but I am curious. I mean, this has just been a tough week, a tough year.
Very tough, very, very difficult. I think the Fed is going to overshoot to the upside, where we may see a reduction in rates later in the year or even first quarter next year.
Did you hear that? Then they'll have to cut rates? Okay, yeah.
I'm saying it right here, right now. As your previous guest said, though, I don't think we've seen that capitulation yet. I know the VIX at 40 is kind of a signal for that.
Sure.
I don't think we've seen it yet, but I also think that some of the panic has shaken out some of the marketplace here.
Understood. Nice to see you, Scott.
You as well,
I'm so glad you were able to be here in person. Scott Bauer, Prosper Trading Academy, and our own Ben Lichtenstein there in Chicago looking at the charts. Thank you both.